Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment, and that's going to be Megan Brantley, Vice President of Research at Likefolio. Welcome back to the show, Megan.
Thanks for having me again, guys. I'm excited to be here.
All right, good stuff. So we're talking rental cars, Avis budget. We typically don't really hit the stock much with you guys, but with the demand for travel out there, Megan, airlines or airplanes full, people are traveling. You've seen Uber stock pop because maybe people are taking more trips to and from the airport at this point. But what kind of data are you guys seeing out of the car rental side of it?
Yeah, so whenever we look at Avis budget specifically, we really broke down those two brands for car because these are the ones that are comprising the lion's share of consumer mentions and really driving revenue. And when we look at this, one place we want to look at is bookings because I think that's really forward-looking. We're looking a lot at web traffic because this gives us insight into consumers who are, maybe searching around for a price and also, looking to book a rental car. And whenever we look at this on the brand level, we do see some outperformance from Avis specifically, a little bit of underperformance from budget comparatively, but overall it shakes out to be about 2% higher than it was at this point last year. So definitely some growth here, but we are seeing some signs of a slowdown in momentum. So while those web visits are pacing about 2% higher year over year right now, they were about 10% higher 3 months ago. So that gives a little bit of perspective, I think, at perhaps a warning sign for a little bit of a slowdown in consumer demand. And whenever we stack this up to competitors, if you were to look at, say, Hertz, we have Hertz actually up by about 6% year over year, and we have Enterprise up by about 3% year over year. So you see all of these different car rental companies are kind of neck and neck, but whenever we look at overall performance, when we stack it up from a total mention volume perspective, we've got the Avis budget group in about third place. And also whenever you look at that overall momentum, so that year over year growth, we've got this company coming in at third place. So, there has been some positive momentum in the stock recently. I think that, just received an upgrade. And so for us, while we do see traction, while we do see some slight outperformance versus where we were last year, we're not necessarily able to justify, at least according to the data that we're looking at, some of that near-term bullish momentum.
Megan, that's based on what I was going to ask you. My questions are real simple. Who's the leader in this space? If Avis is third, who's 1 and 2? Because I was going to ask if Avis was the leader. And number two, my other question is, are these firms really just riding? Should we correlate them just to travel and flights and hotels in general? Is this just one of the group going higher?
This is one of those things where whenever we look at this, Enterprise and Hertz definitely have a larger percentage of overall consumer mentions. And I think that, whenever we look at market share and known market share, we see Avis budget group in third place, and it's still in third place. So it's not like we're seeing this massive shift and all of a sudden this company is outperforming versus peers. And we're not seeing a significant divergence when it comes to the overall consumer trends in terms of renting a car. We're not seeing major outperformance or underperformance by one specific company. But I will say that just from a, company execution level, I think that that's where the Avis budget group is getting a lot of accolades because they're operating a larger fleet at a higher cost per unit. So I think that they've gotten a lot of nods from investors because of how they've been able to execute. And our data isn't necessarily going to speak to that. But what this does present to us, at least from a consumer perspective, when we look at just overall trends and travel trends, we are seeing some signs of softness in our travel trends. And a lot of this is really forward-looking. But how we approach this is we say, okay, the company's second quarter ends, I think, the 30th of June. And we're showing that demand coming in a little bit softer on a year-over-year basis versus last year, versus last quarter. So this is one of those instances where we've got a little bit before this company reports earnings, and this could be a case of bearish divergence performing, at least in our data, where maybe the company isn't going to be able to meet those higher expectations and rising expectations, and especially when it comes to travel.
Megan, when you talk about the competition in this space, Hertz, Enterprise, Avis, budget. I mean, I always think of like budget in the car rental business, like Spirit Airlines in that. It's like more of a discounter at this point. But what kind of happiness levels are you seeing out of this? Because it seems like people get stuck with a specific company that they always use when they're going to rent a car.
Yeah, I think that there is a level of loyalty there that consumers like to play and a level of comfort there. And whenever we look at sentiment levels, car rentals, we joke about airline sentiment levels being really low, but when you're looking at this budget or this Avis budget group, when it comes to overall consumer sentiment, we're talking 40% positive. So the people who have a negative experience are definitely more likely to share their experience versus a positive experience. But we do see all of these companies kind of in the same league, ranging from 37% positive to 40% positive. So I think that, sometimes the more usage these companies get, the lower its consumer happiness levels are. So it's a little bit of a flip of our traditional script whenever we talk about these levels of consumer happiness, because we actually see Hertz trailing Avis budget when it comes to consumer happiness levels, but they're outperforming when it comes to those consumer demand and overall mention volume levels. So it about evens out. So we don't have a really significant edge or a really significant change in that overall consumer happiness levels to give us a better perspective from a long-term or a short-term perspective. But we do see some softening in that e-commerce, those visits to the company's website. So for us, this is perhaps the first sign of a warning flag emerging, or potentially, a bearish divergence, like I mentioned, ahead of its next earnings report.
Yeah, and they don't have a report until the end of July here, Megan. But if you guys did have an earnings score, the stock's up nearly 30% so far this month. What would that be?
So it's in the 30s right now, which for us is slightly bearish. So this is one of those things where we're like, oh, this is actually perhaps an opportunity where our data is telling us something that the market hasn't caught on to yet.
All right, a little bit of divergence there from their data. All right, Megan, appreciate it. Have a great day.
Thanks, guys. You